Hi there, everyone. I'm Christophe Choo with Coldwell Banker Global Luxury Real Estate in beautiful Beverly Hills, California. It's October 2018. I know Christmas and the holidays are literally just around the corner, and I want to give you my market update for the luxury real estate market in the Los Angeles area, or the west side area of Los Angeles, which includes Beverly Hills, Holmby Hills, the Hollywood Hills, Sunset Strip, Los Feliz, Malibu, Brentwood, Century City, all of the luxury neighborhoods in the west side, primarily of Los Angeles. Now, for Los Angeles real estate, for us, luxury generally starts at about 5 million. So this market update is basically about properties and what's going on in that marketplace over $5 million in our market, in our area. And we have right now 3/4 of data to share with you about what's going on. I want to preface this video by making kind of an overall comment. The market has been changing. We're definitely in a more normal buyers and sellers market. It's much more equal right now. In the last 5, 6, 7 years, every year it was harder for better for sellers and harder for buyers. But now that is equalizing itself, and that's natural. Having sold real estate now for just over 30 years, I've been now through 2 down markets, the mid-90s, the late 2000s, and I don't say it's a down market, but the market is changing, and I want to give you some data and my thoughts. First of all, I want to share with you whatever the data is right now, and it's a comparison year over year, meaning what's happened the first 3/4 of 2018 versus what happened in the first 3/4 of 2017. And the data is a little bit off of what it was, but again, it's a more natural market, and I want to go back to one particular point of reference So first of all, for example, right now in the LA West Side marketplace, as of October 1st of 2018, we've had 129 sales of closed properties over 10 million in our marketplace. Versus this time last year, there were 147. So there's been a slight downturn in terms of the number of sales this year over last year, about 16% differential. First of all, why is that? I think markets just have cycles. Temperatures change. I think the interest rates, even though most of our market is not financed, meaning 95, 98% of all the properties that I sell are all cash deals, even at the $2 million, $1.5 million level. But you know, markets, whether it's stock markets, real estate markets, it's based on people's perceptions of the future. And right now people have a little trepidation, I guess at the moment would be the proper word, as to what's going to happen down the road. But the interesting point of this is, if you think of last year, there were 147 sales at this time. This year, 129. And at the end of, that's for all of last year, and this is so far this year, 129. If you look at that compared to 2009, which is actually, let's go back to 2008, because that's now a 10-year cycle, because my notes in front of me, I've been tracking this information since 2008. So in 2008, there were 47 sales over 10 million. 2009, there were 39. So the fact that we're already at 129 sales this year so far, over that number, which is more than 4 times, we're still in a very, very strong market, but it's off what it was a year ago. So we've tipped the peak, we're normalizing, and this is happening across the United States. I've been to a couple of luxury conferences the last month or two with brokers from Manhattan to Vancouver to Miami to San Francisco, Chicago. And this normalization of the market is taking place across the country. We're seeing a little bit more inventory, we're seeing a little bit longer market times, and we're seeing price reductions. But the good thing is it's an amazing opportunity for buyers. And for buyers that are financing, if you think about it, today's rates are about 5.25. A year ago, they were about 3.5. So that's almost a 40% increase in the monthly payment. So yes, prices may go down a little bit more, but I wouldn't wait, because there's some really amazing deals out there in the marketplace. With longer market times, more inventory, and more motivated sellers, I'm seeing some homes that would have sold a year ago for 20, 22 million that are now selling for 16, 17. So there's some really amazing buying opportunities out there. How long will that last? Nobody knows. So that's kind of my little preface into this market update video of kind of what's going on, and not to be scared or worried. It's just a more normal market. But let's now get into more of the nitty-gritty of the data. So once again, so far this year, 129 sales over 10 million versus 147 at this time last year. So it's again a 16% decrease in the overall number of sales over 12 million. No, 10 million, over 12 million. So let's go price point by price point. So 5 million plus, there have been 469 closed sales so far this year versus 504 in 2017. So the $5 million marketplace is only down 7%, and this is number of sales. Prices, in some cases, prices are up about 3 to 5% over this time last year. So prices have not deteriorated overall, but the number of sales have declined. So in the $10 million plus range, I think we just did that, 129 versus 147 so far this year. $20 million, so that's down 16%. The $20 million plus range is 36 sales so far in 2018 versus 43 in 2017. So that's also down 16%. And then the $30 million plus, we have 16 sales so far in 2018 versus 19 in 2017. So that's down also 16%. So interestingly enough, the 10 million, 20 million, and 30 million price ranges, they're all down at the exact same level, 16%. Now, what I will tell you is I don't have the data because I don't really track it, but under 5 million, we're still seeing very, very strong sales. I haven't done the data, but I do believe we're at par with last year, if not a little bit above. We're still seeing multiple offers on properties, particularly under the 3 and 4 million range in our marketplace. So I would say the upper end, except for the upper end, is the ones that are kind of cooling off a bit versus last year. Now, the $40 million price range, surprisingly, because usually the highest end level of the marketplace is usually the strongest hit in downturns. So right now in the $40 million plus range, there have been 7 homes sold so far in 2018 versus 8 in 2017. So it's down 13%, down by 1 sale year over year. So it's not that big of a difference, but if you look at the numbers, it's 13% if you look at it percentage-wise. So what else is going on? Where are people buying this year? So I would say the hottest market so far this year for luxury sales over 20 million has been Beverly Hills. 10 of the sales over 20 million, there have been 36, 10 of them were in Beverly Hills. Malibu is number 2. Malibu has been the second hottest market. There have been 9 sales, and there have been several properties sold in the 40 to 50 to 60 million plus range in Malibu, including the most expensive sale in the history of Los Angeles this year, a property for 125 million. Then there were 4 sales in Bel Air, although right now the Bel Air marketplace itself is down about 50% in the number of sales versus a year ago. The Sunset Strip is a hot neighborhood. 4 sales so far this year, over 20 million. There's some really, really good buys in the Sunset Strip. So I would say the best buying opportunities right now are for the ultra-modern glass box homes up in the hills. So whether you're looking at the Hollywood Hills, the Sunset Strip, Beverly Hills Post Office, Bel Air, to Brentwood, a lot of builders jumped in the game to build those new modern homes. And now there's a little bit more inventory out there for those products than there are buyers at the moment. So particularly in that $16 to $35 million range, that's where we're seeing some of the best buying opportunities. And in the upper price range, Bruce Makowski's house had started at $250 million, is now listed for $188 million. Another house in Bel Air that came on the market for $350 million is now reduced to $245 million. So a lot of these mega estates that probably came on a little bit too high a price to begin with, they're having some good discounts and good buying opportunities. In some cases, I won't mention the name of the house, but there was a house that came on about $100 million. Clients of mine saw it. We made an immediate offer on the house within an hour of seeing it at the property. Did not make the deal because it had just come on the market. That was about a year and a half ago. Now, we did offer about 35% off of the listed price because in the high end, over 100 million, it's very common you'll see 40, 50% differentials between the listing price and the final selling price. But the interesting factor on that particular house, it's currently listed for less than what we offered a little bit over a year and 4 months ago. So I'm seeing that across the board in some of the very high-end modern houses. Really, really great buying opportunities. So just wanted to mention that. So 2 houses have sold over 20 million in the Beverly Hills post office area. There have been 2 sales so far this year in Holmby Hills, over 20 million. 2 in Pacific Palisades, 3 in Brentwood. And so it's interesting. Off-market sales, we do talk about this every time I do my market report. So far this year, 47% have sold off market. That's a really, really high number. But again, as I always talk about, selling off market, in my opinion, is a mistake. You leave a lot of money on the table by selling off market. Buyers tend to like it because they think they're getting a better deal, but the truth of the matter is often they're not. They're just getting something that no one else has seen or knows about. And sometimes luxury buyers, they really do like that exclusivity of the fact it's on the market. But in terms of pricing, the more you expose it, the better price you will get. So who is buying these homes? Interesting point is that, in the last few years, the foreign buying pool was about 38 to 42% of the marketplace. But with things that are going on around the world, that has changed a bit this year so far. The majority of buyers, over 20 million, have been Americans. So far this year, 81% of all the homes sold in Los Angeles, over 20 million, were sold to American buyers. I believe last year it was 78%, so not a huge jump, but that number has been increasing the last 3-4 years, where more foreign buyers a few years ago, less foreign buyers today. I don't really study markets for foreign currencies, but perhaps that is a factor. I do believe the US dollar is stronger today than it was a few years ago against most of the other international currencies. So that may be one of the reasons. So aside from 81% Americans, it's a mixed bag of international buyers, and it's basically one in each category: Canadians, Japanese, Mexican, Monegasque, UK, Eastern European, Saudi Arabian, China, and Australia. So those are the key buyers that are coming. No South Americans bought this year over 20 million, which is a surprise, but that's kind of the numbers. So very heavily geared so far this year towards American buyers for homes over $20 million. So, as we talked about, a large percent of those were off-market sales for this year. The biggest sale in Beverly Hills this last month was an off-market sale. David and Victoria Beckham sold their house in Beverly Hills. They sold it for $33.1 million. And what do you get for that? You get a lovely view. You get a 13,000 square foot home on 1.28 acres, just north of Sunset Boulevard in the city of Beverly Hills proper. So $33 million, which was the highest sale price in the month of September in the Beverly Hills area. So that's kind of the overall marketplace. So in closing about this, here are my thoughts. As a buyer, there's some really wonderful opportunities, particularly in the $5 million and upper end price range. So there's houses that have been sitting in the market for a year to 2 years, which is not particularly uncommon in the marketplace. But if you're a developer and you built a house as a spec and it's sitting there month after month and you have 40, 50, 60 million dollars of equity tied in that property and holding costs, you're motivated. So there's some really, really good opportunities. If you're looking to buy, I would suggest newer homes that were built by developers that have been on the market for a while. That's your best buying opportunity. And cash is still king. If you can do a cash deal with a quick closing, you can get a nice, not a nice discount, but depending on the property, of course, a good discount on those. And otherwise, houses that have been in the market multiple times, 2, 3, 4 times, just simply because they're chasing the market and pricing it still above what it should be each time. Those are good opportunities too, because sometimes with just the real buyer, they can close a deal quickly and for cash. The sellers will take lower than you would think they would take. So it's really good buying opportunities. Again, it's not doom and gloom. I'm not fearful of the marketplace. It's just simply a normalizing marketplace. And again, having been through this before twice, I see the writing on the wall, and it's nothing to be concerned about. It's not the crash of 2007, 2008, when in one day just everything kind of collapsed. And it's not the strong decline of the early 90s to mid 90s, where prices were really strongly declining at that particular time. So again, if you look at the overall numbers, 39 sales in 2000, or 47 sales over 10 million in 2008, versus still today, 129 sales. It's 4 times more. Even though it's not what it was last year, meaning it's down 16% in terms of numbers, we're still 4 times more sales than 10 years ago. So healthy market, strong market, but really, in closing, really great buying opportunities. And buyers of mine that were here early in the summer, that didn't buy in the summer, those homes are still on the market, and they're coming back for Thanksgiving or Christmas. And I think they're going to be able to get 10 to 20% discounts on some of those properties that they saw a few months back in these new construction homes up in the hills. So great opportunities for buying. if you've got cash. And again, even if the market goes down a little bit more in pricing, if it goes down 5% or 10% over the next few years in terms of overall values, which is a possibility. I don't really foresee that, but it is a possibility overall. The bottom line is if rates go up to 7% in the next 12, 16 months, and you're mortgaging your house, you're going to be paying twice as much for that home. So your $15,000 mortgage becomes $30,000. And if you multiply that by 15 years or 30 years, look at the numbers. You're better off buying a little bit higher price today and getting a better interest rate, or buying for cash and getting the best deal you can. I hope you've enjoyed this market report and my personal insights onto it. Again, 30 years in the business. I love what I do. And I live this, breathe this, study this. I'm now 50 years old. For 30 years, more than half my life. That's all I do every day, 24/7. So I'm here to guide you. I'm here to be your resource and help you navigate through the sometimes tumultuous waters of real estate. But that's what I'm here for. That's what you pay me for. As a buyer, you don't pay me. As a seller, you do. And just like going to a doctor, you may not want to hear what your doctor has to tell you, but you hire the best doctor you can when you have a need for medical situation. So just like me, if you have a need for a real estate situation, you need to sell, you need to buy. You may not want to hear what I have to tell you, but my job is to tell you the truth, help advise you and guide you to make the best decision you can in buying or selling Los Angeles real estate. So if you need any help, give me a call. I'm always here to be your resource. I can be reached at 310-777-6342. That's my direct line. Again, 310-777-6342. Or check out my website, ChristopheChoo.com. It has all the information you need. But the best is just to pick up the phone and call me so we can have a one-on-one conversation so I can help you with your needs. Thanks for watching, everyone, and stay tuned next month. As the market's changing, pay more attention to these reports because we do know what's going on. I will give one share that I forgot to mention. Right now, we're down about 40% in the number of new pending transactions, meaning the number of pending escrows over 5 million today versus this time last year is down about 40%. So again, that's why I really think, because of the seasonality of our market, even though we don't really have down seasons, typically, Thanksgiving through Christmas through January, there's not quite as many sales as there are throughout the rest of the year, especially for local buyers because they're busy with the holidays and celebrating and entertaining. However, a lot of the international buyers will be in town. So as a seller, my advice is get your house on the market now. Take advantage of the prices where they are today. Take advantage of a little bit less inventory between now and January, because a lot of sellers will wait till January, February, March to put their home on the market. So you'll have less competition. You'll have a little bit more international buyers and a better opportunity to sell your home today for top dollar than maybe a few months from now. So thanks for watching, guys. Stay tuned for my market updates and just my videos. If you haven't subscribed, click on the channel and subscribe to my YouTube channel so you get updates on the market for me whenever I post them. Thanks, everyone, and see you soon, and goodbye from beautiful Beverly Hills.